Hey, this is David Miller with the Miller Group of Keller Williams Realty. I'm here to help you get real estate smart. All right, so today I'm going to be talking about how the COVID-19 virus has affected our real estate market, and it definitely has affected it quite a bit. Then I'm going to share with you where I think the market is going to go, and then I'm going to lastly share with you how buyers could actually take advantage of this market. First of all, my wife and I want to hope that everybody is abiding by the guidelines of social distancing. Let's make sure we do our part to keep everybody out safe so we can get past this sooner rather than later. So how has this affected the market? What I like to look at is the leading indicators. And one of the first things I look at is the showings. How many showings are we having on active listings? So since the beginning of the year, it's been gangbusters. In my 14 years of doing real estate, I've never seen it this busy before. Of course, as COVID-19 started to come into Central Florida, that did slow things down quite a bit. Showings actually are down about 52% versus, I would say, February, the average in February per week. So it definitely has taken effect. What we're finding is that the serious buyers are still out there that need to buy a house, but everybody that was not as serious might have put it on hold for right now. The other thing we look at is open houses. We don't do them anymore, but when the last two we didn't have anybody through compared to getting an average of 12 people through for 2 open houses. So that obviously dropped as well. They are starting to allow virtual open houses started this weekend, so I'll let you know next week how that affects the market as well. If we look at pendings for the month of March were 2,724 properties went under contract. All right, that's pretty good. If I go back just to the last week, 670 of those happened in the last 7 days. So real estate's not dead. It might have just slowed down, but there's still people out there that are buying houses. Then I also look at listings. How many new listings came on the market? Well, in the last 30 days, 2,294 listings came on the market. And of that, 748 came on the market just within the past week. So that shows you that there's still people that are putting houses on the market. Now, where do I expect the market to go? So obviously this has affected the market. And a lot of people have memories of the Great Recession where the pricing went so high and then came crashing down, and it went down and down until 2011. People ask me all the time, is that going to happen to our market here? Personally, I don't think so, and here's a couple reasons why. First of all, when that recession took place, you got to look at the inventory. The inventory was very high at that time. There were a ton of homes out there. When COVID-19 hit, this was still a very strong seller's market where the inventory was very low and there was more buyers than sellers. The other difference is that people were not saving as much money then as they are now. So the average savings was only 2% in 2007, 2008. And right now it's around it's around 8%. So people have more money in the bank to withstand longer periods of time than they did before. That doesn't mean everybody, but on average, we have about 4 times more savings than we did before. The biggest difference is equity. So back in 2007, 2008, people were using the house as an ATM machine. They would pull money out to buy a new car or add an addition to it. And because of that, when the market took a downturn, nobody had equity. And if they didn't have equity, then they had to do a short sale if they wanted to sell, or they had to go into foreclosure. So in today's market, since the prices have gone up since 2011, depending on when you bought your house, people have a lot more equity now than they used to. So if the market does falter a little bit, it's not going to be a mass exodus of doing short sales as we saw before. And then the other thing is that I personally feel that this is going to last for about 2 or 3 months. It's going to be short term. If it lasts longer, then that's going to negate everything I'm telling you here. But there's going to be so much pent-up demand because the dynamics of the market are there for a very strong market. Interest rates are still very historically low, very low. Money's cheap, so it's a great time to buy a house, and the inventory of homes is still very low. We're going to see how low that stays over the next couple months, but I do expect it to still be a seller's market. So in any type of market, when a shift does occur, the question is, it's going to uncover opportunities. So the opportunities that we're seeing right now are really for the buyers that are in the market. This is why. So in a seller's market, there's more buyers than sellers, and because of that, depending on the price range, you usually get in situations that houses that are priced right and in good shape don't last long on the market, and there's usually multiple offers. With multiple offers, that means you're competing against other people and you don't have the leverage, which means you're probably going to pay more and not have the best terms. Well, as I mentioned at the very beginning, since the showings have dropped about 52%, there's not as many buyers in the marketplace right now. All right, so that means as you as a buyer, if in the past you were wanting to buy a house and you couldn't find one, or you couldn't find one that wasn't already under contract, this would be a good time to take another look. Amory, my wife, who only works with the buyers, has been going crazy working with buyers, and especially with builders. If you find a builder that has a spec home, they're willing to give the ship away in order to allow you to go under contract on that. So it is a great time to buy a house. Now, if you're a seller that was thinking about selling your house, this is a good time to do everything to your house you need to do to get it in top showing condition. What I do know in this business is that homes in top showing condition consistently sell for top dollar. And I'm sure that's what you want to do. And if that is the case, take this time to do that. Call up a realtor, have a realtor meet with you so they can let you know what things to do or what things not to worry about, so you're investing money in the right stuff. So once this virus passes through, you're ready to go. You don't need to start at ground zero, and you can get the house on the market before everybody else, which means that you're going to have a leg up on the competition. The other thing is, let's see, I can't see here. Oh yeah, I mentioned the interest rates are low. Take a look at your interest rate. Find out what you're currently paying. This is a great time to refinance your property. If you don't have a lender that you currently have, give us a call. We have many preferred lenders that we can refer you to. So those are the three opportunities that have come about of this virus. I'll keep you guys updated. Feel free to join us on our Facebook page here and like it, and we'll be glad to keep you guys updated on what's going on. Of course, be smart, be safe, and we hope that you are real estate smarter. Hope you guys have a great day. Thanks.